Welcome traders. We are going to learn everything you need to know about risk to reward ratio. And make sure you watch this video to the end so that you'll be able to learn everything I'm going to teach in this video. So before we get started, let me simply tell you the meaning of risk to reward ratio. Risk to reward ratio simply shows you how much you are risking and how much you stand to gain before you even place a trade. So risk to reward ratio is a very important factor to be considered as a trader before you place any trade. Let's write something here and see how it is written. If you have 1:2, this means that you are risking $1 to make 2. That's $1. If you risk $1, you will make $2. So you have $1 to $2. That's what 1:2 stands for. Let's try another one. If you have 1:3, 1:3, it means you are risking $1 to make $3. If you have 1:1, let's write it. 1:1. It means you are risking $1 to make $1. Then if you have 2:1, it means you are risking $2 to make $1, which is very bad. This is not a good risk to reward ratio. So don't even try this 2:1. We are going to do all the calculations and I'll give you all the details you need to really understand risk to reward ratio. So let's continue. Let me press this thing so that I'll be able to write so many things. This is TradingView. There is a tool that can easily calculate your risk to reward when you plot your entry, your stop loss, and your take profit. When you come to this place, you select the long or short tool. Let's try long first. Assuming we want to long GBP USD from this point, this is an imaginary point, and we place our stop loss here and target this other point here as our take profit. As you can see from these two, our risk to reward is 3.04. Yeah, it means if we risk $1 here now, we will make $3.04. So that's exactly what we will get here. So these two can easily help you calculate your risk to reward. Let's try the short two. If you carry your short two here, let's go here. Carry the short two. If we short here now and target this point, put our stop loss above this swing high. What we have here now is 3.12 as our risk to reward. So if this trade now goes our way, we are going to make 3.12 risk to reward ratio. So that is 1:3.12. This for short position. Before we go into the main thing now, which is the calculation part, that will show you how this thing works. Let me delete these things here first. What we do, we are going to write win rates, risk to reward, the outcome we have, and the profit. So let's do it together. We have, let's change this thing. Let's prepare it as a table. Win rate. We have win rate. Then the next one should be RR. R over R. We are using this to represent risk to reward. So let's have it like as RR. The next one is outcome. The outcome we have, outcome of the trade. Then under this outcome we have express center, win and loss. So the number of trades we win will be under win. The number of trades we will lose will be under loss. So the next column will be profit. So let's write profit. Profit. Make sure you pay attention to this thing I want to do. Some people used to ask what is the best risk to reward ratio. The best risk to reward ratio depends on your system. Your system will tell you the kind of risk to reward ratio you will choose to be profitable. So based on this example I want to give now, you'll be able to choose the best risk to reward ratio depending on your trading strategy. So let's continue. Let's assume we have an account, trading account. So let's write trading account balance. Trading account balance of $100. $100. Then we are risking number of trades. Let's have number of trades. Number of trades. Let's assume we take 100 trades and we are risking risk per trade like $10 per trade. Risk per trade for $10. Good. These are the conditions here. Trading account balance is $100. Number of trades 100. Risk per trade $10. So suppose we have a win rate of 70%. Win rate 70%. Then RR under this win rate, let's assume it to be 1:1. 1:1. So the number of trades we win here now is going to be 70 since we have 70% win rate. And the number of trades we will lose here is 30 out of 100 trades, making it a total of 100. So we win 70 and lose 30 on a win rate of 70%. So let's do our calculation. You see that if you risk $10 per trade now, this is going to be 70 times 10. And our risk to reward here is just 1. So 70 times 10 is 700. Then times 1, which is the reward we are getting, is still 700. So we won 70 trades and made $700, but we lost 30 out of 100. So this 30 times 10 is 300. So what we do is to subtract 300 from 70, and our profit now is going to be, let's write it here, 400 $400. $400 out of 100 trades at win rate of 70% and RR of 1:1, we get $400. Let's move to the next example. If our win rate is 50%, let's take 50% as our win rate. I hope you are following. 50%. The next one should be our RR. Suppose our RR here is 1:2. 1:2. Then we know our win rate is 50. So the number of trades we win is 50 here. And the number of trades we lose is also 50, since the win rate is 50. So it's 50-50. Then if you do the same calculation we did here, knowing that we've won this 50 trades and lost 50, and we are risking 10, multiply 10 by this 50, you get 500. Our reward here is 2. So each time we risk $10, we make $20 if the trade goes our way. So we have 1,000 here minus the 500. Our final profit after 100 trades is going to be $500, even though the win rate is 50. I hope you see how this thing is going. And this is it. Let me adjust so that we'll be able to do other examples. Then the next one, assuming our win rate is 40%, win rate 40% growth. Then, and our risk to reward is 1:3. 1:3. This shows that we will win out of 100, we win 40 trades and lose 60 trades. So in this scenario now, our profit still maintain the same calculation. That's, we are risking $10 per trade. That is 40 multiplied by 10, which will give us 400, times this one minus the 600 we lose. So we'll get, after all the subtraction, we'll get 600 as our final profit. We have final profit as $600 at 40% win rate and 1:3 RR. So you see, let's do another example, which should be the last one. After this one, we'll move to other thing. We have win rate of 30%. Let's assume our RR is 1:6. 1:6. So 1:6. So at this point, what will happen is that we are winning 30 trades out of 100. 30 out of 100, and we are losing 70 trades because the win rate is low and RR is higher. So this is what we have. Following the same steps we used in the previous examples, our final profit is going to be 1,100. How did I get, let me, $1,100? Let me add dollar here. If you risk $10 per trade and you win 30, 30 multiplied by 10 It's going to give you 300, then you multiply it by 6, that's 1,800. You lost 70. 70 times 10 is 700. So 1,800 minus 700 is going to give you 1,100. So you've seen it now. Your focus should be on the profits, not actually the win rate. You can have a higher win rate and make lesser profits. So based on these examples I've given now, you know the win rate you have on your system. You should be able to choose the best win rate, because if your win rate is 30% and you are using RR of 1:1, you'll be at loss. You will not be profitable. Then if your win rate is 40% and use RR of 1:1, you are not going to be profitable. That's why there is no hard and fast rule to this thing. You must understand your system before you choose the type of risk to rewards you are going to use. I'm not choosing anyone for you, but based on these examples I've given here, you should be able to choose. But I will advise, if your win rate is below 50%, always go for 1:3 RR. If you've done your analysis and what you have is below 3 RR, don't enter the trade. So that would be my advice. I will make a video on trading psychology, and I'm going to elaborate more on this. This particular video is just for risk to reward ratio.